Now we start in Zimbabwe, where the stock exchange is experiencing its very own Black Tuesday. It's recorded only $105 in turnover and just 2 trades on a Tuesday. Now the stock exchange, which is one of the oldest on the continent, but one of the worst performers, already lost about $300 million market capitalization in the first half of the year. That followed a decline in economic activity on the back of a drought and, of course, falling commodity prices. Now, the bourse completed a demutualization exercise last year and had planned to seek partnerships with major vendors such as Bloomberg and Thomson Reuters to ensure that its market data is easily accessible to investors worldwide. Despite this, companies listed on the market complained that a tough trading environment has led to revenue and volume declines. Now, Farai Mwakutuya joins us in Harare with an update on today's market performance. Farai, as always, welcome to the show. Now, of course, like we mentioned, a decline in economic activity on the back of a drought and falling commodity prices has seen Zimbabwe's market lose quite a lot in the first half of the year. Has it hit rock bottom today? Tell me, what are the market players saying?
Well, Uche, one would imagine and certainly hope that it doesn't go below what we've seen today. A stockbroker I spoke to earlier says that this is probably down to the fact that foreign investors who make up the majority of investors on the stock exchange, they dominate trade, accounting for more than 80%. They've been finding it increasingly difficult to repatriate their profits and investment income. And that's due to the fact that the central bank has introduced new restrictions to money flowing out of the country because of the liquidity challenges that Zimbabwe is facing. And so in the absence of the ability to move out their money, investing on the Zimbabwe Stock Exchange becomes unattractive for them. In addition to that, as you say, it's a tough operating environment. The economy is tight, subdued economic activity, and that's weighing down a lot of the counters and a lot of the companies that are listed on the stock exchange. So it's certainly a tough operating environment here, and this is the impact of it. Uche.
Now, Farai, what are some of the other factors that are influencing investor sentiment right now? We know that some feel that a recovery in the country could hinge on the anticipated increase in liquidity as the government, of course, clears its debts with the IMF, the World Bank and the AFDB. Is this one of the factors influencing a recovery of Zimbabwe Stock Exchange?
Well, Uche, what many people agree here is that what this country needs most is an injection of new capital, a bailout package, a stimulus package, whatever you choose to call it. And that's why the government is aggressively pursuing this re-engagement with international money lenders, the IMFs and the World Banks. Now, what is probably happening and why investors aren't coming to the party yet is they're waiting to take a cue from the IMF to see if indeed they are willing to play ball with Zimbabwe, if they're willing to say, Zimbabwe is open and ready for business. And then if the IMF is willing to work with Zimbabwe, then we'll probably see investors come to the party. And I think right now, that's why investors are adopting a wait-and-see approach to see how all this pans out. Uche.
Now, Farai, like we mentioned earlier, Zimbabwe Stock Exchange is actually one of the oldest on the continent, yet it is also one of the worst performers. We know it did complete its demutualization last year, but what progress has taken place in terms of making the exchange more competitive on the continent?
Well, the Zimbabwe Stock Exchange, we know, has made significant progress in its plans to set up an alternative, or maybe not alternative exchange, but to allow small and medium enterprises to be able to list on the exchange. And the thinking there is if it's easier for them to list, we'll have more companies listing, more activity, more trading, and ultimately more turnover and revenue accruing. In addition to that, the exchange migrated to an electronic trading platform, and their thinking there was to make it more accessible and more open to foreign investors who can trade and see their trades online real time, and therefore encourage them to participate more on the ZSE. So those are some of the efforts that the ZSE has been trying to make it more viable and more profitable, but ultimately they're largely being overshadowed because of these economic challenges that we're currently facing right now.
That's right. Well, many thanks, Farai, for those insights. Farai Mwakutuya joining us there in Harare.